Hello Maverick traders, this is Imri and welcome to today's currency recap. Alright, so it looks like all eyes are on the Fed's annual symposium, summit, whatever you want to call it, in Jackson Hole. I always laugh around this time of year because people think that the Fed's got it all figured out at this juncture, in the economic cycle, but if you look at the Fed's track record over the last little while, it hasn't been too hot. I mean, what I'm trying to say is that people will look at what's going on in Jackson Hole. They're going to pay a lot of attention to what Powell has to say tomorrow in the hopes that he provides some clear direction in terms of where we are in this current rate hiking cycle, whether we're in the medium stages, late stages, early stages, and I don't think any of it ultimately matters. The market's going to digest whatever he has to say, and they're going to forget about it a little while down the road, which is always how these cycles go. Anyway, rant aside, the other piece of news today, which I guess was a slight boost if you're if you like watching economic news releases. That slight boost was a revision to the GDP decline. It declined 0.6% from last month's reading versus the original reading of 0.9%. So a slight difference there, but enough hope to at least some market observers, I guess, to say, yeah, you know what, maybe we are going to be headed for a soft landing after all, and this isn't going to be an out of control recession. That's a discussion for a different video. If you guys are interested in that, however, let me know. I'm happy to talk shop, cocktail talk, as Rob loves to call it. So I'd love to have some cocktail talk with anyone that's interested in this stuff. So just drop me a line if you are. Market-wise, markets had a good day overall. Gold was up slightly, oil was down almost 2%, and equity markets were up about 1.5%. So let's take a look at the S&P. So, it's awesome when you're on a hot streak and you're calling these things correctly, and I'm hot right now, I've got to say it. So we've traded right into that trend line I was talking about, pulled back, and I have the RSI on this screenshot for a reason. Look at the sharp bounce off of that halfway line here on the RSI. That's something I look for when I'm trying to assess momentum, but I have a feeling this is a trap. I'm not convinced by today's rally. All right, I'm not convinced at all. I think it's possible we close this gap right here and then head lower, but I would not be surprised to see us break for one more leg down before we find a more longer lasting bottom. How will I know if I'm wrong? Well, if we take out the prior swing high right over here, then I'll say, all right, we've got at least one more leg higher to go before we get a serious pullback. Over in the VT price chart, we traded right into that resistance level. We've now pulled back, similar momentum reading, but again, I think this momentum reading is a trap, and I think we will roll over for one more leg lower, maybe testing the 88 handle before, similar to the S&P, we put in a more substantial bottom. Over in crypto, well, we got that sharp drop. I've been talking about this channel for a while, talking about how there's a whole number of technical factors all coming together at this swing point around 27,265. And you can see now this rally looks very constructive indeed. And I do believe we're going to break out the bottom of this little structure here for one more leg lower in crypto. I'm going to give the market a +1 just on the basis that we're trading above the 50-period moving average, and the general slope of the price action move still seems quite strong. However, we're struggling to hold above the shorter term moving average. We'll have to see how tomorrow's day ends. And the slope isn't as aggressively pointed upwards as it was before. Now, this is a very fluid situation, and I think we're going to get either a firm bullish reading by end of day tomorrow or a firm bearish reading as we head into next week. Over on the weekly calendar side of things, tomorrow we've got the core PCE price index, which is a key inflationary reading that the Fed likes to pay a lot of attention to. I think that'll definitely be a potential market mover. That's early 8:30 a.m. Eastern time. And then the main event of the day, as it were, is going to be on what's going to come out of this Jackson Hole symposium. You know, is the Fed, are there going to be any clues as to how hawkish the Fed is feeling? You know, or have we hit the terminal fund rate, and are we going to start another easing cycle? I think that's unlikely to occur, but you know, if that were to happen, the market would probably take that as a bullish sign. Okay, so moving on into currency analysis. First up, we've got the cryptocurrencies. So crypto's had a good day across the board, especially Ethereum. But you know, like I said, when we looked at that crypto basket, it's looking pretty bearish to me. So I will consider, you know, rallies in these larger cap cryptocurrencies to be counter trend for now. Over on the currency side, I mean, Aussie outperformed by far. The dollar was the biggest loser on the day, followed by the euro, then the Swissy. Interestingly, you know, the yen was pretty much flat on the day relative to everything else. And yeah, it's been a really interesting day, and we're going to take a look at some interesting currency price charts in just a moment. But first, some velocity analysis. So I've got the Aussie all the way over on one end of the extreme side of the spectrum, and the Swiss franc, the euro, and the dollar on the other. So those will be pretty good pairings to be taking a look at. And without any further ado, let's take a look at some possible trades. Okay, so in terms of baskets, we traded into that support zone in the Aussie that I was talking about, and we've kind of launched higher. Love that. Next area of resistance for the Aussie to test, you know, will be these prior highs here. We need to be able to break through those to get to the prior major swing point going back to April of this year. All right, so still some wood to chop for the Aussie. As we head into this level, I do expect the Aussie to pull back against most of its peers. All right, so I'd say immediately bullish Aussie, still possible, still a thing, but you know, it's possible the Aussie might put in a short-term top tomorrow or very early next week. The Canadian dollar heading into resistance, would not be surprised to see a turn lower here. So although Aussie Canada has been in a decent downtrend for most of the year, I would say, looking at that cross, you know, to play that Aussie strength and Canadian dollar weakness might not be the worst idea in the world. It's not my trade personally. I'm just saying based off the relative strength and weakness analysis. And let's take a look at Aussie CAD actually. Okay, so you can see what I mean. For, you know, large parts of the year, we've been trading, you know, lower, but we're currently bouncing right now. And if I look at the momentum readings, right, I love this bullish momentum signature. And on the MACD, we see a potential bullish cross forming shortly as well. If we throw some moving averages on here, you can see we're breaking above the 20 period. So it wouldn't take much for the moving average slopes to point higher as well. Okay, so it's not my trade, to be clear. I'm not going to be trading this. I'm just saying purely on a relative strength and weakness basis, there is something here. Okay, taking a look at the Euro basket, we broke underneath that support level I've been calling. And interestingly enough, we're starting to trade in a falling wedge formation. Falling wedges are typically reversal patterns. And if I wouldn't be surprised to see some pretty sharp bullish divergences forming. So you can see that in the MACD histogram here. Look, I think the euro will trade lower for one more leg, especially against the dollar. But after that, you know, I wouldn't be surprised to see an unwind of those short euro positions, at least for, you know, quite a few weeks, if not a couple of months. The euro is due for a bounce here, and it's getting to be a very crowded trade on the short side. I'm definitely not in a rush to go out and buy euros, but this pattern is making me nervous. So if I'm playing the euro on the short side, I'm going to be sure not to overstay my welcome. And then over on the dollar basket, well, we're trying to bust out of this resistance here, you know, and I've been talking about this resistance level for quite a few weeks now in these currency recaps. Every time we've traded into this level historically, we've broken sharply down. Is this time going to be any different? That's the big question. My personal thought is it's going to be a little bit different. I do think we're going to go on to make a new high above the swing high in July. I don't think we're going to take out the swing high from March 2020 on this next leg. So if we trade a little bit higher, let's say around here in the basket, then I would expect a sharper decline. Currencies usually, maybe usually is a strong word, but changes in currency trends tend to occur around the end of the year or the start of the new year. So I wouldn't be surprised if we continue seeing a strong dollar theme to close out the year, and then somewhere towards the end of the year or the early new year, we're going to see a reversal in the dollar's fortunes. So that's what I've got for you guys in terms of potential trades, potential currencies to keep an eye on. Hope that was helpful. If you have any questions, just let me know. Okay, so in conclusion, it's still not a great trading environment today. I mean, the Aussie's been in a downtrend, and today it outperformed, but I think ultimately it is a counter trend rally, and I do think, the Aussie is going to give up all those gains over the next couple of weeks. And really, I think the dollar's coiling for that next move higher. So if you did want to look at things on a relative strength and weakness basis, if there's a setup you see in Aussie Canada, that's not the worst place to be looking, again, just based on that relative strength and weakness analysis we just did. Otherwise, I'm waiting patiently for the majors to kind of settle themselves, and I'll be looking to hopefully buy into dollar strength as we head into next week. So thanks everyone, thanks for listening, and I'll see you guys soon.